Hello everyone, S-Tier Trader here. 1 month has come and gone on YouTube. That means it's time for a reflection on where we have been and calibration on where we are going. One of my two favorite psychology books that I've read so far is Psycho-Cybernetics by Maxwell Maltz. A core component to this book is related to a guided missile. A guided missile knows its target. The missile does not navigate to this target in a linear trajectory, however. That missile has to constantly determine whether it's on the path to its target or not. If it is not, the missile must make corrections and recalibrate its trajectory. I am that missile. My target is to become a professional trader. I am not going to get to that target in a linear path. I am going to deviate from this path by making mistakes, both big and small. It is up to me to calibrate myself back to the path of the target. This thought process is why I will be doing these monthly reviews. This review will be split into two sections with timestamps in the description. The review portion itself will go over how this month went overall. I will specify where I have developed my strengths and where I need to calibrate to reach my target of becoming a professional trader. The second portion will be on the game plan regarding this channel over the next 2 months. While I am speaking about my performance over the last month, I'm hoping you can take away your own reflection process from this video. We are developing the mindset of a professional trader. I would argue that developing your trading psychology is much more important than developing your trading model early on. To quote ICT, you need to be like a pit bull on a pork chop. Train your mind to latch onto your goal, and your guided missile will make the adjustments needed for you to keep on the path. To summarize my first month of trading, to put it bluntly, it kicked ass. My goal was 90 pips and I hit 137. You can see each one of those pips form on my trade review playlist. I took one loss and my stop loss wasn't triggered at all. While I do believe that 137 pips per month is sustainable, not having my stop loss triggered certainly isn't. In fact, spoiler alert, you are going to see my first stop loss hit in trade review number 6. Like I said in my first trade review, my micro goal is to determine if my model is consistent. This has been shown so far, as each of my first 4 weeks on YouTube, I have hit my 23 pip goal. A goal with my channel is to prove that ICT students can be successful traders. Hopefully, you are seeing this to be true. Let's compare my numbers to ICT's What Every New Trader Wants to Know series, video number 2. Fun fact, ICT went number 2, and specifically these tables, was the video that pushed me to learn how to actually trade. More on that in another video. This first table is where my micro goal of 23 pips a week is based off of. 23 pips a week, or 90 pips a month, at 2% risk on a 30 pip stop, doubles your money every single year. Every single one of my trades was below 30 pips, with the exception of my spoos trade in trade review number 4. A component to this calculation that you do not get to see is my risk percentage. There is a massive emphasis on risk in our charter membership, and I may eventually put this on display for you guys if I decide to do a demo account on this channel. Anyway, you know that I went well above the 90 pip per month goal, so let's take a look at another table. This table changes the pip goal to 38 pips per week or 150 pips per month. If you can hit these numbers, you'll more than triple your account every single year. I came up 13 pips short of this goal, while going to work and while going to school. That is not to brag. That's to show you that hitting these numbers is realistic. I remember in my trading infancy, I saw this exact table and thought that this was too good to be true. I remember thinking the S&P 500 grows about 10% every year, and ICT saying that I can do this every single month? Yeah, right. Well, you've seen on this channel that this goal is achievable. Now again, I didn't take a loss for the month, which is not going to be the norm. Yet at the same time, You saw me call but not enter a 105 pip move in the British pound. It goes both ways. Eventually, if I keep finding consistency with my 23 pips per week goal, I'll ramp it up to 38 pips per week. For now, though, I am going to focus on the low-hanging fruit approach, as this is all I need to align me with my target of trading for a living. The biggest successes this month came beyond the numbers. I have certainly developed as a trader. I've learned that I need to take a higher percentage of my profit at the first take profit when I'm away from the charts. The biggest skill that I've developed this month is that I can trade in consolidations now. In the Forex market especially, the markets have been range bound. That was until Russia invaded Ukraine. Prior to fall last year, I specifically focused on one-shot, one-kill trades, which is what ICT primarily taught early on in YouTube. One shot, one kill, or OSOC, is fantastic for trending markets, and I literally cannot wait to show you guys these trades, but the market needs to allow for these OSOC trades. I cannot force OSOCs. I've since learned how to day trade, and this has boosted my month-to-month consistency immensely. I used to dread consolidations in the market, and now I can navigate price and trade within them. This was the first month I've ever not taken a loss in a consolidation. It's tangible proof to myself that I am improving. I knew that I needed to calibrate myself to become consistently profitable during slow periods, and this month tells me that I have done just that. By the way, if you want to learn the foundations of one shot, one kill, check out the Scout Sniper series by ICT for free on YouTube. The link is in the description. So what kind of adjustments can I make to further align myself with my target? When you ask yourself this question, make sure it's something tangible and specific. Don't just say, I'm going to get better at my entries. Say something like, I am going to not rush my entries by ensuring price is going higher when I click sell and lower when I click buy. For myself, I am going to work on something that I've wanted to work on for a while. I am going to allow myself to look at my trade only 5 times in a day. Now, 5 times may sound like a lot, but I constantly look at my trade throughout the day. Like, I wouldn't be surprised if I opened up TradingView 20 times a day when I'm in a trade. This is not good. I need to be able to set it and forget it. I've said these words before. Set it and forget it. I actually feel like being away from the computer where I manage my trades was actually a good thing. Like, there were multiple times this month that price stalled for the day, and had I been home, I'm sure I would have canceled the trade or at least taken a large portion off. I have my stop loss and take profit orders all ready to go. I have my time protocol ready to go. There is literally no reason for me to stare at the charts like a deer in the headlights. Now, I will say that there are some things that can occur in the charts that tells me when I'm offside. We call these lines in the sand. When price crosses these lines, our protocol tells us to preserve our stop and exit the trade. In my case, however, constantly pulling open the charts and feeling the highs of price being in my favor and the lows of price going against me or even consolidating, it's truly an addiction right now. I can align myself to becoming a professional trader if I break this addiction. Removing the need to open my charts will allow me to trust my proven profitable model and remove a large portion of emotion from the markets. Let's talk about the future of this channel. March and April are insane for me every single year. That is, until I become a professional trader. I work as an accountant, and I am less than a year away from achieving my Chartered Professional Accountant designation. March and April in Canada is tax season. That means in March, I work around 45 to 50 hours a week, and then in April, it's 55 to 60 hours a week, and even more in the final 2 weeks. On top of this, in March, I am currently a student taking an accounting module. I say all this to let you know that I am just so incredibly busy during these 2 months. However, this does not mean that I will slow down my channel at all. March is going to be at my same pace I'm currently doing right now. I seem to be able to get done 2 videos a week, one trade review and one video on another topic. I believe I can keep this pace up throughout March. Unfortunately, in April, I am just unable to trade. This sucks because April often has a lot of volatility to it, and I want to trade it, but it is what it is until I become a professional trader. This means that my content will switch to psychology and trading view based videos. I should be able to do a constant stream of 5-minute or less videos that are focused on developing the mindset of a professional trader, as well as becoming more organized and efficient in the charts. I have a ton of ideas for both of these types of videos, and I have zero doubt that you will find these useful in your trading careers. And you bet that once May comes, I am going to be a pip generating machine, so stay tuned for that. That's it for the month review. We've taken our first steps into our journey to becoming a professional trader. If you want to continue on this path with us, please be sure to go long on the like and subscribe buttons. I really appreciate you guys so far. This has been fantastic. Keep up the hard work. Good luck and good trading. If you want to see all 137 pips formed in my charts last month, click the video on the left. If you want to start your own journey to becoming a professional trader, click the video on the right. Please go long on the like and subscribe buttons. Thanks for watching.